Welcome to Informed Investor. It's another day of red in the markets. Our benchmark indices, Nifty and Sensex are down by around 0.5% each. The US markets are also in red, driven by the uncertainty and volatility surrounding President Donald Trump's sweeping tariff policies. In today's video, we'll dive into three key developments that's shaking global markets and economies. Firstly, Trump's escalating war with China, with the US now imposing an insane 104% tariffs on China, followed by Trump's plans to impose new tariffs on pharmaceutical imports, and what this could mean for India. And lastly, the RBI's monetary policy decision to cut interest rates by 25 basis points. So without any further ado, let's begin. First up, the big headline grabber. Continuing his economic war, Donald Trump has announced 104% duties on imports from China. This move follows China's retaliation with a 34% tariff on US goods. If you're confused, let me break down how this tariff worked. Since 2016, Trump, during his political campaigns, outlined to counter unfair trade practices, especially from China, thereby threatening tariffs and a lot more. And if you look at the recent timeline, back in February 2025, Trump imposed a 10% tariff on Chinese goods over fentanyl-related concerns. In March 2025, another 10% was added, bringing the total to 20%. Last week, a 34% tariff was introduced as part of Trump's reciprocal tariff regime, increasing the total to 54%. This week again, following China's retaliation, Trump added another 50%, culminating it to a staggering 104% tariffs. This aggressive stance has disrupted global trade dynamics, creating a lot of uncertainty. Trump's sweeping tariffs have raised fears of a US recession and disrupted a global trading order that has been in place for decades. Economists warn that these reciprocal tariffs could create chaos for global businesses. China as well is feeling the heat, and the impact could be severe. Citi has already cut its 2025 China GDP growth forecast to 4.2% from 4.7%, citing rising external risks over tariff hikes. While the US and China are going head to head, some countries are taking a different approach and holding talks and negotiating with the US. The Trump administration has scheduled talks with South Korea and Japan, two close allies and major trading partners. Additionally, Italian Prime Minister Giorgia Meloni is likely to visit next week to discuss trade relations. Even some companies like Nissan, Honda, Hyundai are considering shifting domestic production of US-bound vehicles to US to avoid tariffs. Now moving on, just a while back it looked like the Indian pharma had dodged a bullet. Even as trade tensions between the US and China escalated, the pharmaceutical sector was spared. The Trump administration had consciously kept drugs and semiconductors outside the tariff net, acknowledging how crucial low-cost generics from India are the American healthcare system. Fast forward to now, President Trump is planning a major tariff on pharmaceutical imports soon. This is particularly concerning for India's pharmaceutical sector, one of our industries most dependent on trade with America. Now, America is India's largest export market for pharmaceutical goods. If you look at data, out of $27.9 billion of Indian pharma exports, a significant 31% of this goes to the US. Not surprising, the Nifty Pharma Index tumbled, with most pharma players in the red following Trump's announcement. Stocks like Lupin, Gland Pharma, Oro Pharma sank as much as 3%, as these companies earn about 30 to 50% of their revenue from the American markets. These firms, which have built significant business models around exporting to the US, now face considerable uncertainty. Here's what's interesting. It's not just India that stands to lose. America depends heavily on low-cost generics manufactured in India, and higher tariffs would lead to higher price hikes, inflation, and potentially drug shortages in the US. As Ravi Uday Bhaskar, Director General of the All India Drugs Control Officers Confederation, pointed out, nearly 30% of our total exports, around 27 billion, are going to America. The US can't shift to any other country, as no country other than India is capable of producing cost-effective quality medicines. He further noted that India has about 650 US FDA sites, the largest outside the US, and the production cost will be approximately 30% higher if US manufactures this. While the US definitely will feel the pinch, Indian companies also will be affected. Basically, Indian pharma players operate on thin margins in the US generic space. If tariffs kick in, absorbing these costs will be tough. Companies may try to pass on higher prices to US consumers or insurers, leading to price hikes or even drug shortages. All in all, the imposition of tariffs could influence prices and demand for Indian drugs in the US. Now coming to our last story, which is surrounding the RBI's rate cut. To add some respite amid this trade turbulence, the RBI announced today that its Monetary Policy Committee has unanimously decided to cut interest rates by 25 basis points, bringing the repo rate down to 6% from 6.25%. This was the second consecutive cut, with the previous one occurring in the February 2025 Monetary Policy Review. This move comes amid softening inflation but also a slowing economy, a balancing act that the RBI is trying to manage carefully. The RBI governor, in a statement, said the global economy was going through a period of uncertainty, posing challenges to policy making, referring to the sweeping tariffs announced by US President Donald Trump. This acknowledgement highlights how India's monetary policy is increasingly being shaped by global developments, particularly US trade policy. Now let me explain what this rate cut means for you and the economy. When the RBI lowers interest rates, it reduces cost of borrowing for banks, which can then offer cheaper loans to businesses and consumers like us. For everyday people, this means potentially lower EMIs on home loans, car loans, and personal loans. For businesses, it means cheaper capital for expansion and operations. The hope is that this increased economic activity will drive growth, thereby leading to job creation. The RBI has also lowered the GDP growth forecast to 6.5% from an earlier projection of 6.7% due to global uncertainties. This downward revision reflects the potential impact of Trump's tariff policies and the broader global economic slowdown. Additionally, the RBI mentioned the quarter-wise projections. Quarter 1 at 6.5%, Quarter 2 at 6.7%, Quarter 3 at 6.6%, and Quarter 4 at 6.3%. On the inflation front, CPI inflation for the financial year 2026 is projected at 4%, a decline from 4.2%, with quarterly projections of 3.6% for Quarter 1, 3.9%, 3.8%, 4.4% respectively for the other quarters. Now, all in all, the RBI's decision is a well-timed and much-needed move. With CPI inflation easing and GDP growth slowing, this was a favorable moment for the RBI to initiate rate cuts. This move should help revive consumption growth and reduce borrowing costs for the interest rate sector as a whole. Moreover, combined with the recent measures in the union budget of leaving more money in the hands of people, the RBI's policy decision offers a much-needed stimulus for sustained growth and a consumption-led economy going forward. Now moving on to some other important market updates. IOC will pump 61,000 crore into a mega petrochemical complex in Paradip, Odisha, its biggest single location investment. The plant, set to be operational by 2029, will cut import dependence on key chemicals like PVC and HDPE. Senco Gold stock jumped 5% after record Q4 revenue of 1,300 crore, which is up 19% year-on-year. Diamond sales were up 39%. With plans to increase 5 to 7 new stores in Quarter 1 of fiscal 26. Next is Jio Financial, which jumped 4% after it launched a digital loan against securities product up to 1 CR. Fully online, it does a 10-minute dispersal via app. Next up is Home First Finance, which rises 4% on launching a QIP floor to raise 1,250 crore fund. These funds will fuel growth and loan expansion. Lastly, Tata Motors, with its JLR segment, halts US-bound exports amid new tariffs. It is still assessing next steps as the US market remains a key market for them. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.